All right, y'all. So everybody that was tuning into the chat, we just fucked up XRP right here. Definitely caught a bag, caught a great move. I'm gonna run through right now what I was looking at just to show y'all kind of how trading works. For those of you who are new, you might not understand everything. Those of you who've been around a while, you'll get it pretty cleanly. Again, not an expert, only been trading for about a year now, really been picking it up the last couple months. But this is stuff that you can go out there, as long as you're watching the academy, as long as you're plugging in, hopping on sessions, you can really pick this stuff up. Time frames are key. So obviously here, been watching Ripple all day. Been watching it, since the 4th when it really took off. But if we look at this starting out on the daily, right, we're seeing that 1, 2, 3, about 6 out of the last 9 days have been extremely bullish. So that identifies, our initial trend here. When I come down to the 4-hour again, right, let's move back here, right? What's the beginning of today? This is probably the start of today, right? Yeah, beautiful. We see that it started out extremely bullish again. And then really what happened is I came down to the 1 hour. Now, it's going to take me a little while to map some of this stuff out on here because I was using my phone. And so I don't have my levels and everything. But if we come down here, what we really saw is that we were really coming to a wedge. And what that means is, although, right, price is still kind of consolidating here, but consolidating in a downward angle. Our highs are getting higher and our lows are getting lower, right? So it's not like higher highs and higher lows. You see what happens here, and let's see if I can get it for you guys, is that these lows keep getting higher, right, a little bit. And then what happened was the highs are getting lower, right? And so what really happens here is you begin to form, and I don't know exactly where this was. I don't want to like draw it perfect now because the move already happened. But basically what we were looking at was this in here, right? And what this is this is a bullish flag. You can call it, a wedge, whatever you want to call it here. All that matters is this is an extreme sign of a return to the upside, right? We're waiting for a breakout here, right? The highs, they're getting lower, but the lows are getting higher. And so as soon as price breaks out of here and closes, that's the move that we're looking for, right? So I teed this up probably 4 hours ago, before all of this was in here, right? This part was missing, but you could see, right, with this missing, that price is respecting the upper part of this zone. See, it's actually wicking off of it, right? And so the sellers are trying to keep price below here. The buyers are keeping price above here. This is like, it was the perfect move. So when I saw this, I made sure that I put it in the chat for everybody, right? And so what we're looking for is, this right here is a great place to get in because you capture all of this, right? And let's see how many pips that is. Where are we here? My bad, guys. We're going long. So, we can capture based on this move, getting in here, catching the full amount. We're talking about, 1,000 pips there. But you can use a tight stop loss here, right? That's what you could end up with. But if you don't let the move finish, you risk it falling out of the zone, and then boom, the bottom here is all the way down here back at 103, right? Or even at 115 or 121, right? You don't want to get caught in that. So yeah, you can get in early and you hope this happens and you keep a tight stop loss. Cool, that's one way to play it. Another way to play it is to wait until a full candle closes above this zone. So if we zoom in here, right, price breaks here, Yeah, this candle does close above, or if you know your zone was moved up a little bit, delete that, right? If your zone was here, then you need that one to close out. So it all kind of depends on where your zone was drawn, but waiting for this, right? Oh, respected perfectly. All right. Closed here, we're in for all of this. And still, even if you don't catch the whole move from bottom to top, if you just catch this candle, that's what we're looking for, guys. That's all you need. You catch one of those a day, that'll keep the 9 to 5 away, right? Especially once you get a hang of it. So look here. I mean, look, boom, it's beautiful. What did we catch here? Yeah, guys. I mean, that you don't need anything more than that. That's all you need. That was beautiful, and price is still going. It's at 1.45. We caught it in here at about. I had a position here at 1.38. I had one at 1.37. And my worst position here, I was just being a little bit greedy. I caught it like 1.40, and then took it to 1.42. So I put that in. So, you know, if you guys are looking to put in a stop loss, right, you can put in a stop loss at the next zone, where the break of structure would be, right? So break of structure here, give it a little bit. My bad, that's not what we wanted. Trend line. Ignore that, guys. It's been a long day. I want my horizontal line. There we go. Boom. So we could put a stop loss there. We could put another stop loss maybe down here. You could also, if you got in up here, you keep a tight stop loss at right about here, the break of that zone. These are all different stop losses you could have placed here. You're just looking for break of structure or where price is jumping off of. But yeah, guys, you could also just go into this with no stop loss and just watch it and wait to see if price breaks the structure to the downside, or just like we saw here, that beautiful candle. Like, guys, these don't happen by accident. When you can catch it as a break of structure, when you can catch it coming out of a wedge, like, that's all you need a day. You catch one of those a day and life just starts to change. So appreciate you guys for tuning in. Glad everybody caught a bag. If you didn't catch it, I'll get you on the next one.